Good morning and afternoon to you, wherever you are in the world. Thank you for dialing into Lucapa Diamond Company Limited's maiden results webinar. My name is Stephen Weatherall. I'm the Managing Director and CEO of Lucapa Diamond Company, and next to me I have Nick Selby, our COO and Executive Director. On behalf of the board and management team, we take great pleasure in presenting to you our preliminary financial results for the 6 months ended 30 June 2021. With the successful development of our diversified production base, we've built an exciting company with 2 cash-generating assets and significant blue sky potential in our advanced exploration programs. We too are set to add to that with our recent mine development acquisition. We have over the years built a very special company, not the biggest, but certainly one of the most unique. The diamond market softening in 2018 and 2019 and the pandemic that hit us hard in 2020 left us all questioning if this was the right development strategy for the company. The results we announced to the ASX today are the fruits and surely proof that it was. We will have a Q&A session towards the end of the webinar. Please click on the red button should you wish to submit a question, and we'll tend to as many questions as we can at the end of the webinar. The key drivers of the results are the operations and performance of the operations and the health of the market into which we market our product. Let's get going with Lula. Firstly, the cautionary statements. Please take note of the cautionary statements and read them in your own time. The presentation is on our website and on the ASX platform for your perusal. At Lula, under the alluvial mining program, we were 100% up for the full 6-month period. Our expanded fleet were in operation. We recorded record volumes, and we even mitigated an extensive wet season. Our mine plan, as we announced, focused on the high value areas as opposed to the high grade areas, such as the E46 area adjacent to the Kanguij catchment area. We recovered significant large and fancy colored stones. If you have a look on the right hand side there, you'll see our largest stone recovered during the period, 144 carat white diamond. On the bottom right hand side there, you'll see the most expensive diamond on a per carat basis for a pink diamond. That sold for in excess of $100,000 per carat. Also of significance was the success of our multi-channel marketing strategy, whereby with the combination of tenders, our preferred buyers marketing, and also our polished partnerships, we managed to achieve record revenues. The results that we show you today and in a few screens time have led to the ability for SML to declare record loan repayments and dividends, which have been approved by the SML board and recommended to the SML shareholders. Equally, under our Kimberlite exploration strategy, our bulk sampling of priority kimberlites has recommenced. Samples are already excavated and ready for transport to the plant. If you have a look at the bottom right hand side there, you'll see the excavation of one of those samples and a stockpile awaiting transport to the plant for excavation. Crusher circuits and additional fleet are already en route, and with the advent of our new Kimberlite exploration program, we too are scoping a standalone bulk sampling plant that we can use to treat kimberlite samples uniquely, as opposed to having to take down the alluvial plant to treat the samples. As mentioned a number of times, we too are seeking a majority interest. Those discussions are progressing. However, with the pandemic, it is very difficult to dialogue face to face, and we'll attend to those. I'll elaborate on that further as we go forward. Under the Kimberlite mining program at Mutai, as announced, we did start the year unfortunately with the COVID-19 closure. We too, however, took the plant down for the expansion tie-ins and the ramp up thereafter. So effectively for the 6-month period, we got an effective 4 months operations out of the mining program. Very, very good result considering the time standing down. The expansion was completed and the ramp up is continuing. In the second quarter of the year, we did achieve record volumes. We are attending to mass balance adjustments as we transition into more competent kimberlite material as well. As noted, we do have technology trials. We are trialing a continuous miner in the third quarter, and we look forward to bringing those results to you as well. As alluded to as well in many announcements, the mine plan also focused on the southern lobe, and we too recovered significant large and fancy colored stones. Top right hand corner there, you'll see the 213 carat D color type 2A diamond that was recovered this year. And the bottom left hand side there, you'll too see the most expensive diamond that was recovered this year as well, an 11 carat pink diamond. Successfully, our multi-channel marketing also produced the results, including our polishing partnerships. Our first diamonds went into those partnerships this year. You've seen us record our first profits from that partnership, and we look forward to recording many more from that as well. We too, as a result of the multi-channel marketing, achieved record revenues. Our repayments have already begun back to Lucapa against the capital loan. We have announced through the course of the 6 months, $3 million or 4 million Australian dollars return payments in capital loans. Importantly, our operations can perform well, but if we have a diamond market that isn't performing, it is very difficult to achieve our revenues and our forecast cash generation. On the screen here, you'll see our mine development timeline put on top of the global rough diamond price index. You'll all know that we commissioned the SML mine in January 2015 when the index was 229. We acquired the Matai project in Lesotho in January of 2017, where that index was just 200. 2 years later, we commissioned the Matai mine, where that index had moved to 212. Unfortunately, thereafter, as mentioned earlier, we saw a significant softening of the market, and when the pandemic hit, our market all but ended. We got involved in the Merlin acquisition process when the liquidators launched the process, and we put in our initial bid submission when the market was just 180. The market now has climbed to 254, which are price levels that we have not seen in the last 7 years of the diamond industry. So for our production strategy to really produce the results, we are certainly seeing a much better market to sell into, and we certainly see a very, very strong cash generation going forward. In a couple of slides time, I'll talk to you about where we see the supply and demand fundamentals and how we believe that those will support our strategy going forward. In terms of the results that I'll walk you through today, I'll take you through Lulo and Matai and the aggregate thereof. I will also talk to you about our attributable ownership in those projects, whereby we own 40% in Lulo and 70% in Matai, and I'll talk to you how we have achieved our results when we compare them to 2020. I'll first talk to you about the physicals. I will then take you through a summary financial statement and our cash balance at the end of the period. Firstly, at Lulo, we put through 245,000 bulk cubic meters, recovering 11,206 carats, and we sold 11,856 for a staggering $3,275 per carat. That culminated in us producing a rough revenue of 50.6 million Australian dollars in the 6 months. At Matai, we put through 500,000 tons through the plant. We recovered a little under 15,000 carats, and we sold 20,000 carats through the 6-month period at $818 per carat, which is significantly higher than our resource dollar per carat. We generated 21.2 million Australian dollars in rough revenues for Matai. That culminated in a $71.8 million generated in revenue for both operations. Our attributable percentage of that, our 40% in Lulo and our 70% in Matai, resulted in our attributable amount of 35.1 million Australian dollars. So all in all, 75% put through the plants. Additionally, 88% additional carats recovered, a 95% increase in carats sold, 104% increase in the diamond price. That is due to the quality of the recoveries as well as the improvement in the diamond market, resulting in a 241% increase in rough revenue. After taking cash operating costs into account, Lulo generated a cash operating margin of 27.6 million Australian dollars. Matai generated just shy of 6 million Australian dollars, a total of 33.4 million Australian dollars for both operations in the 6 months. Our attributable percentage amount is 13.5 million Australian dollars, which is a 585% increase over the prior year. Those results have seen a significant cash generation at both Lulo and Mutai. At Lulo, at period end, it had a 30.3 million Australian dollar cash and receivables balance. At Mutai, it had a 3.2 million Australian dollars cash balance, but to note, it did pay 4 million Australian dollars back to the centre in that period as well. A total of 33.5 million Australian dollars cash in the group operations at the period end. Attributable to Lucapa, 27.6 million Australian dollars, an increase over last year of some 228%. So as you can see, our production strategy really starting to come to the fore, and now that we are able to sell our product into a very, very normal market and a resurgent market, the results are starting to show. What we expect for H2 is more of the same. We expect our operations to produce exactly what we are forecasting. In the second half of the year, we do have capacity improvement projects on the go. We have mentioned an infield screening unit that we are taking to Lulo that will allow us to screen off material at distances of some 20 kilometers away from the plant and tram a lower volume of material concentrated to the plant. As well, at Mutai, we are looking at a continuous miner where we believe that will result in significant improvements to the throughput and the recoveries that we are seeing right now. We also expect a normal diamond market, and as a result, we are expecting to we are guiding the market to the upper end of our cash operating margin of 17 to 21 million Australian dollars. In terms of our corporate highlights, we announced the Merlin acquisition in late May. We signed a binding agreement to acquire 100% of the historic Merlin diamond mine. It is a 4.4 million carat resource with 70 unresolved anomalies on the ground. We paid just 8.5 million Australian dollars for this ground, or an effective $2 per resource carat. We are currently attending to the conditions precedent. We are planning our geotechnical drilling on the ground in the not too distant future, and we too will be bringing a scoping study on our open pit mining methodologies to the market in this quarter. It will be Australia's largest commercial diamond mine when we bring it into production within the next 24 months. We have an extremely strong balance sheet. Lucapa is in its best financial position ever. Our strong operational performances at the operations have generated solid cash flows. We've also seen strong investor support for our production strategy and growing it. When we announced the Merlin acquisition, we saw a number of strong institutional and high net worth individuals come onto the register. As it stands right now, we have 25 million Australian dollars on the balance sheet and in cash. We will be looking to reduce our long-term debt, and in that regard, with such a strong financial position, we will look to expedite those repayments as well. As it stands now, we too have 112 million net asset value on the balance sheet, and I say as it stands now, excuse me, that is as at 30th June 2021. Importantly, as we've said, diamond market needs to be balanced for us to sell our product into. We see it being that way for many, many years to come. If you have a look at global carat production over the last, say 17 years and then forecast for the next 5 years, you'll see that since 2005, where it topped out at 177 million carats produced, we are in 2021 estimating only 119 million carats. That is a reduction of some 30% in global supply. If you have a look at what's forecast as well, we're looking at forecast levels of just 128 million carats over the next 5 years as well. We do believe this constrained supply or lower supply will be positive for diamond pricing. So we certainly see the environment being well supported, the pricing environment being well supported for the foreseeable future. And obviously that bodes well for our production assets. In terms of where we stand as a company, are we undervalued relative to the assets that we have developed? We have put together 2 graphs on this slide. I will compare our net asset value and our market capitalization since January 2015, where we embarked on this production strategy. In January of 2014, the net asset value of the company was a mere 37 million Australian dollars. As we have raised funding, as we have built value over the years and put together two very, very special diamond mines, our net asset value has increased to 112 million Australian dollars as at 30 June 2021. If you compare our market cap over that period, you'll see that the speculative interest in our Kimberlite exploration programs certainly saw our market cap in excess of our net asset value. But over the years, as we have seen a softening diamond market, we have seen the sentiment reduce that market cap to what we consider really, really low levels. So at a market cap of just 53 million Australian dollars to a net asset value of 112 million dollars, we do believe that we are that against the rough price index, and we look at where these two intersected in January of 2019, and we map that to 100 at that time. The diamond market certainly dipped, as you know, in 2019. It dipped even further in 2020 as the pandemic hit, but it has risen to 19% higher than the diamond prices that existed at January 2019. That happened to be the same date on which we commissioned our second mine. If you have a look at the net asset value that the company displays on its balance sheet, you too will see that it has tracked in a similar manner, and too is at an 18% higher than the start of January 2019. If you index the market capitalization to that same date, you will see that the market cap has not returned to where both the net asset value and the diamond market has returned to as well in terms of average prices. So we are trading at a 53% discount to the NAV, and pretty soon, once we receive our loan repayments and our share of our dividend from Lulo, we will effectively have 43 million Australian dollars in cash available to the company, which is approximately 80% of our net asset value. Or sorry, not net asset value, 80% of our market cap. So I'll leave it up to you to decide if we are trading at a significant discount to the value that we believe we have generated over the years. And when you look at a company that has generated 33.4 million Australian dollars in cash operating margins from its two assets, and those loans that are owing to Lucapa will be repaid very quickly, I think that the answer is fairly evident. So in a nutshell, why invest in Lucapa? If the previous screen hasn't convinced you already on why you should be investing in Lucapa, well, we are a growing global diamond producer, and we will be building the largest producing mine in Australia over the next 2 years. We have two producing high-value diamond mines. Our operational guidance is very strong, and we are guiding the market to the upper end of that guidance. We have recently acquired an additional mine development opportunity right here in Australia. We look forward to bringing that into production over the next 24 months as well. We have significant exploration upside. Our production strategy has not been in substitution of our Kimberlite strategy. It has been in addition to. We do and still have those same the same exciting projects in Angola, and we are running hard at those projects now. With the support that has come onto our balance sheet and on our register in recent months, we'll be running hard at that Kimberlite exploration program, and we are expediting it. We have until 2024 to produce the results. We have 2 additional years or 2 additional renewal periods of 1 year each, and we do look forward to producing the results that we know are there. The diamond market has recovered significantly post the pandemic, and every single diamond company is lagging the recovery. The opportunity to pick a market that is at a cyclical low is here, and you don't have to look further than the diamond market. Additionally, as I mentioned on 2 slides previously, we're in our best financial position ever. We currently have 25 million Australian dollars on the balance sheet, and we look forward to increasing that to 43 million as we start to repatriate our funds out of Angola as well. We are very well funded to progress our mine development opportunities as well as our exploration programs, and we look forward to repaying our debt ahead of schedule as well. Thank you very much for listening. I will look to attend to any questions that we have received through the webinar. Thank you very much for that question. Obviously, it's a very important question. Look, we are advancing the discussions with our Angolan colleagues. If we were only talking about the Kimberlite exploration program, which is a joint venture, I think the structure and the way forward would be simpler. Certainly, when you look to increase your investment into Angola, as you start to hit certain levels, it does require certain approvals or additional approvals over and above what we have already invested. You have alluded to a situation that we are currently considering. Yes, it has been raised whether we look to take an additional stake in the alluvial program as well. We are discussing the potential structure with regards to combining both the Kimberlite exploration and the alluvial program under one roof. Now, naturally, doing that presents additional complexity as well. Obviously, that complexity is not easily handled when you are dialoguing via Zoom or telephone call. It would be much better if we were face-to-face in country as well. We are taking legal advice as to how one would look at putting those two structures together, what legal and regulatory hoops that we would have to jump through in order to do that as well. It does take time. Trust me, our Angolan partners would like to see an end to this as well, because not only do they want to see additional foreign direct investment from ourselves as Lucapa, but we too also want to invest additional capital into the program. We want to expedite it to the levels that we believe will produce the results that we are very, very hopeful that are in the ground there. So yes, it is taking time. It is not a simple matter. It is very complex. With the potential of combining the two structures, it has certainly brought in a little bit more complexity, but we are working on it on a day-to-day basis, and we hope to have results in the not too distant future. Having said that, we are as enthusiastic about our ground when we own 39% as if we owned a majority stake as well. We want to achieve those results, and owning a 39% in a very significant discovery is certainly very, very exciting to us as well. So hopefully that has answered your question. Like most countries around the world, not just in Africa, there are exchange control requirements. When you bring capital into a country for investment and when you export capital out of a country in terms of your returns, you do have to go through the exchange control approval process and repatriate your returns. There are two ways that you can repatriate your returns. Number one is through the loan repayments, and another way is through a return on your dividends on your initial investment. With the significant declarations that the SML board have approved, we are naturally going to be applying for both. Obviously, our loan repayment requires its independent regulatory approval, and then the dividend requires a second regulatory approval as well. So once those are approved by the shareholders, we will make those applications to the National Bank of Angola to ensure that we can repatriate our funds back to Australia. Look, there are a lot of diamonds in the cutting and polishing partnership. Every single diamond that has been sold from Mutai this year has gone into the partnership. You will know that we select the very best for cutting and polishing. So there is a number that are being cut and polished into very, very many stones. The large volume, but by and large, a smaller proportion of the value are traded out in the rough, and those cash flows come back to the polishing partnership as and when they are sold. Between Lulo and between Mutai, we have significant volumes in the cutting and polishing. We did allude when we announced our annual report or published our annual report that with the pandemic last year, the cutting and polishing was delayed because of the closure of the manufacturing sector. Over the next 6 months, you'll see a significant value come through to our income statements from that cutting and polishing strategy. So I don't think it's the number of diamonds that we have in our cutting and polishing strategy which are important, but certainly there's a significant value that will come back to the group and companies in this next 6 months. Look, obviously it's a very important question. When you have a look at where we were last year, asking me that question, I think would have seen a big frown on my face. Asking me that question today certainly will elicit a different answer. We have a significant cash balance in the company. We have significant cash which should be repatriated back to Lucapa very, very soon. In terms of our current debt level, it is approximately 30 million Australian dollars. We have already started to pay down those debt levels. Mutai has started to pay the IDC back its loans on a quarterly basis, and certainly we have been attending to our loan repayments back to Equigold over the first 6 months as well. We do believe with a swollen cash balance that we can expedite the debt repayments. We believe reducing the debt on our balance sheet will be an important tool to seeing our share price rise. But equally, it's a very nice problem to have in terms of how we might balance the cash available to the company in terms of reducing our debt, in terms of potentially making a return to our shareholders. But also let's think about perhaps keeping some of the cash available to invest in the Merlin project. Initially, one might have thought in terms of funding that program, we'd look to go to financiers because we didn't have the cash available to us at that stage. But as we go forward and as we see the diamond market going from strength to strength, we believe that we'll have significant cash generation where we could potentially self-fund the development of the Merlin operation as well, or to a large degree self-fund the development of the Merlin operation. So I think we have very nice problems at this point in time as we manage that cash flow between debt repayments, returns to shareholders, and also investing in our recent acquisition where we believe will accrete additional value as well. We're working with the liquidators right now on attending to the conditions precedent. We have attended to the conditions precedent that are within our control. So we are working with the liquidators in attending to a number of the agreements, deeds of assumptions, as well as regulatory approvals. We do see those concluding over the next few months. We are, however, also working with the liquidators and with the government to look at getting on the ground ahead of those conditions being fulfilled. We want to get moving on the ground as soon as possible. So we're looking at all avenues to actually expedite the process and get on the ground to do the operational work we want to do this year. We do see it concluding over the next 3 to 4 months. Some of those timelines are within our control and some aren't, but we don't believe it's going to hamper on the ground activities, and we will be on the ground very soon. Just to add to that question as well, we do look forward to bringing our first open pit mining methodology scoping study to the market. We have received first draft of those. We look forward to bringing those to the market by the end of the third quarter. Yeah, look, there are a number of ways to sell this kind of diamond. Auction is one of them, and certainly if you look at comparisons over the last 6 months to a year, you'll see that pink diamonds have fared very well at auction as well. The other way to market this diamond is to put it with discrete high net worth individuals and also very, very high-end diamantaires. So we are working on the latter as our first option, and we will see what value that elicits or what proposals and offers that elicits, and then we will make a decision thereafter whether we are happy with that number or we'll look to take it through that. Our partners in Safdika are working hard on it, and we'll have more on that in the not too distant future. All right, thank you very much, everybody. It looks like that is the end of the questions. Thank you very much for attending our inaugural results webinar, and we look forward to speaking to you again in the not too distant future. Thank you very much.